Hello traders, how are you? Happy Wednesday. Please give me some okay that you can hear me and that you can see my screen. Perfect, thank you very much. So let's begin. Good morning, John. Good morning. Well, it's afternoon. It's afternoon, but good morning. So what do we have? This is the FOMC day. The market is expecting that we can see it by the moves, trying to get some direction, to gain some direction, and some moves retrace back right away. Let's go over the report. Just want to quickly remind, this is from the one that we had yesterday, right? Let's go over that and see what trades we are after. So the first one is the dollar franc. Our plan was basically, let me just put it here. Now you should see that. The second wave to the downside, back to the trend line. And we want to see the 4-hour chart divergence holding and making a push. We had a very serious level here, which we call a bank zone as well, right? Bank zone, inner area, okay? Big candle, big body, inner candles, ideally with the same color. Now we had two very small greens and then one much bigger red inner candle, and then a breakout in the direction of the main candle, which is the red. This area is critical to hold for, well, the whole idea of this to become like a double cycle. So what do we have since? The double top was created and the divergence came inside. Trend line is broken as well. Now, but technically all the conditions are ready for the second leg to start and develop, and this is basically the plan. Now we do have to pay attention to the FOMC tonight. That might change the things, you know. Technical might move perfectly if the fundamental reasons support. As for now, the expectations are pretty much for negative. I wouldn't say negative on the dollar, not that that's not really truth, but mainly negative expectations from the market environment, generally indices and so on. And as indices become sensitive, a lot of money runs to the Swiss and the yen. So that might contribute. We need to see the FOMC in the statements and act accordingly. If we go straight lag through all the Fibonacci's, you know my personal view, one straight move through all the Fibos is a warning sign, and in that case I always love to step back and minimize exposures and risks. So this is the first one that we have going from yesterday. Next one, which, where is this one here? Dollar yen. We are also after sales. This is our critical zone here, right? Back to the trendline area. Let's throw it here. Okay, broke this one, climbed slightly higher, expecting it to be, well, ideally false breakout and trend continuation. Massive resistance is holding here, and of course clearance area. It wasn't cleaned. That would be still perfect, right? If we have some stop losses here. So let's see, what do we have since? Dollar yen. Here we are moving the first leg. Now this area was not cleaned, and the trend line is still not completing a false breakout. That will be decided again after the OMC. This or other way around, we have a trend line breakout to happen, or we have text, or we have another climb here for ideal moving average divergence and clearance above the stop loss zone. Just want to remind you, what's this clearance zone I always talk about? the area where a lot of players locate their stop losses, those who enter early without any significant setup, right? Technical conditions and so on. So dollar yen, again, any of the scenarios to happen, trend line or so, we are after sells. Meanwhile, we had a beautiful engulfing pattern here, the divergence coming in play. So it does look good. Could still turn around and make the last leg. Daily might be building up some bearish hidden divergence still. Again, we can't judge that now. We must see what comes after the FOMC. That might affect the whole candle as it looks as for now. We must see how the day is over. Let's go back here to the report. So the dollar yen is in play. Pound versus the Aussie, also bearish since previous week. We got this push. Now we do need to pay attention to the forming triple cycle in a bigger scale with this false breakout and divergence forming. If this is ending this way and hold, so not basically the idea of a hold here is we don't have an immediate candle breaking through again, right, going down again through the false breakout level. If that holds, then we do easily expect here some kind of corrective cycle or some kind of a range movement, right, like this, before the longer term continuation. For us, the plan does not change. We are still after sells. Weekly has its bearish divergence with ending cycle. Daily had its false breakout with a beautiful kicker, piercing, you name it, doesn't matter how you call the candle pattern, but a wonderful candle pattern going through the false break zone. And we had a 4-hour chart making triple lower highs, lower lows. Therefore, the plan remains bearish. However, the short term, if that ends the way it looks as for now, again, it's not a guarantee for nothing, right? Because this candle might end completely differently, and the next candle could simply go through the level again. But if it closes bullish, as it looks right now, and hold, then we might be exposed to the correction. Does that change any of a longer term plan? Of course not. Weekly and daily are stronger than the 4-hour chart, right? But it will allow, if that happens, allow to trade some of the short-term rallies. Well, for those of you who go against longer-term cycles by trading the short term. For those of you who, like myself, who are for longer term, the idea is sell the rallies, not to trade the rallies. And the next one from our list, Euro Pound. Now, we have a critical zone right here, next to this clearance zone. I believe, as I explained yesterday, we are going to see here retraces down and ideally second leg before the longer term cycle, the longer bearish term cycles will take place. And look what happens right now. The pair seems creating this classical moving average divergence with a massive negative histogram in between. So this is a very, very serious probability for a move down. Pay attention that, well, we couldn't really name that as a cycle, the first leg, but if we go lower, we can make it a special cycle. And the idea there would be that this might be the second leg before the drop. For that to happen, we need to measure Fibonacci expansions, and we figure out that 61.8 level is right here. Why do I have two Fibos? We don't need two Fibos. Next to 0.89, so the closer we reach there, the stronger the bearish pressure would be. And pay attention that it's also above the clearances area. So this is the first clearance, this is the second clearance. Again, clearance is the zone where early sellers love to protect their positions, right? And after clearing that, ideally, the pair would definitely be ready to provide us with some sell opportunities. And the way the 4-hour chart structures looks right now, it's simply perfect. Of course, ideal scenario would be this, to start to create some false breakout on this area, 4-hour chart to make double cycle, 1-hour chart to confirm it with divergence. That would be simply classical. So watch this, it might happen today or tomorrow, right? So keep that in your list. Same exactly with the pound franc. Again, clearing one area, clearing the second. This one is clearing already. Making a Bollinger Band duplication, building some bullish hidden divergence here. 4-hour chart forming the last run with this divergence. So very, very, very likely to assume that this is coming to the end. Okay, so 4-hour chart and the 1-hour chart ideally to fit in. Watch out for the 1-hour chart. If we manage to get this divergence in play, it should provide a very nice bounce opportunity from there. Okay, so have your eyes on that. Now, also very important to mention, the first round here of the convergence didn't provide the rally. After the retrace, it crashed lower. So basically this convergence failed to hold, but a convergence is a sign that the bulls have their eyes ready. And that's why I show here, if the 4-hour chart and 1-hour chart fit in and the divergence comes in play with the next tick, it should be a wonderful buy opportunity again. Take a look also on the days and look what's coming here. Okay, we're getting there. The closer we get, the stronger the pressure on the buys should be. That's for the pound. Now, pound Aussie also discussed. Now, let me just check I didn't miss anything. EuroCAD. What happened? EuroCAD, our view is bearish, so we are after sell the rallies. Now, on the short-term view, take a look what happens here. We are currently trying to make a breakout. We could see that trying to bounce, and we expect the sells rallies there. Look what happens on the 4-hour chart. Okay, triple cycle, bullish divergence in play. We might be experiencing here some kind of a correction, which we will look to sell. So have your eyes ready on this pair. Okay, now could we trade this rally again? Yes, but remember it's much more aggressive because it's against the higher time frames. Two false breaks are in play. If we go through the trend line, this is definitely a possibility, which we will want to go and to sell later. And from the Forex updates, that's all we'll discuss about what we watch soon. Next one is the oil, which we have here. Two waves, bearish divergence with coming with this double top, beautiful divergence, both histogram and moving average, basically doing something like that for us, triple expanded double. and the idea is bearish since. So here we are. The last trend line is broken. Last lows are broken. So the expectations are accordingly. As per the daily cycle, I want to remind you that's our levels ideally to reach. So it might be an amazing run. We do need to pay attention to the second leg because it could easily make a hold here on a massive area of 60 and block with a bullish divergence. We cannot predict will that or not, but this is a sign that we must pay attention to. Why it's so important in this case? Because remember, the last divergence from the higher time frame, the weekly, is bearish. If the daily would come against and complete this, basically we will have a sign of lack of synchronization. That's exactly the moments where we will want to step back, right? So pay attention to that, and it's very, very, very important to remember always the big picture. Once the higher time frames, and if the higher time frames lose the synchronization, you lose the big momentum or the big money involvement. And if the big money is not involved, the moves can be very, very tricky. So meanwhile, of course, as we have the trend line and the last low, sorry, here broken, our expectations for that to develop another cycle. Okay, so our view remains bearish, and that's pretty much it. All right, now let's talk about the next forex pairs we are paying attention to. First one is the euro kiwi, which is fighting around this critical level, and I want to remind you the 61.8 was cleaned. The closer we get to 100, and we are getting very close with this divergence in play, it's only a question of time until we see a reaction. But we are not going to gamble when it's going to happen. We need facts. Facts are lower lows after a false breakout, or triple lower highs, lower lows to define a possible turnaround on the short term with a bearish run. Now, the daily is a double cycle. 4 hour fits in as a verification. The false breakouts and the lower lows might happen on the 1 hour chart. So pay attention to what comes from this time frame. And again, false breaks and lower lows, or lower highs, lower lows, that's the structure we want to see. You got it? Start to look for sell rallies setups. The way it looks, it might happen within the range of next several days. So pay attention to it. And another one, of course, is the euro versus the Aussie. Again, a reminder, after these false breakouts and convergence that came in play, our expectations are to look for sell rallies. That might be with this hold, that might be trying to make another high, but every new high to be created, if is created for us, it's still a zone to look for sell opportunities. The reason, the massive cycle and the sign from the convergence that we currently are exposed to. That could be this way, that could be developing into something bigger here. And again, the levels, the divergences, that convergence that shows the interest from the sellers already is something to pay attention to. As simple as that. Let's go back to the report. New Zealandian dollar, well, didn't really provide new opportunities since yesterday, just continuing its push for us. The pressure still remains bearish. Now, same with the Aussie dollar, but I want you to pay attention to the SPT here. Aussie dollar looks good. All the time frames, all the clouds are bearish. So we could easily see that pushing lower, and 1 hour chart might be providing some interesting opportunity after the FOMC, a good one to start and follow. Okay, Aussie Kiwi, we are bullish. This trend line on the 1 hour chart was broken. There is only one thing which I dislike at that moment, as you can imagine, the lack of momentum. With such breakout, the expectations are always to gain a momentum. Now that could still happen, but the fact is currently we are slowing down with divergence, and the 4 hour chart starts to show a possible divergence on this rally as well. I dislike such low momentum scenarios. So if you are involved, like myself, in buys, that's save from the market to reduce the exposures. Never ever try to be smarter than the market. Convince it that it has to move up. It hasn't. It will move if it finds the momentum. As for now, there is no momentum. Why would we fight? Right? That's what the market tells us. So what I want to make an update here, and update is accordingly. Lack of momentum equals lack of interest at that moment from the bigger money. Lack of interest from the bigger money equals lack of interest from me. Now, all the cycles and everything still fit in for the buys. That's why I'm not changing position, but I am reducing the exposure. Why? If it still flies perfect, still involved, we can always bring back the exposure that is closed. And if not, then the risk drops significantly. All right? And that's for the Aussie Kiwi. Now let's go back here. Don't discuss. That's pretty much it from the list. That's pretty much it, guys. Nothing new at that moment. Well, nothing changed on the market since. Pay attention to the two interesting cryptos we have in play. First of them is the Ripple, which holds massively the 0.30 level, starts to create higher highs, higher lows. So it's a good pair to start looking to be involved in the buys. And same said with this one. I like this one. I'm talking here about Ethereum versus the Bitcoin. Okay, also very beautiful hold. Psychological 250. Not sure how psychological could be said correctly in crypto market, but that's what we currently see. This becomes as invalidation area. We start to see the higher highs idea, looking for the buys. So it's all in the report for you guys. Okay, also would be included today, of course. Ahmed, what's my opinion about the pound kiwi? Pound kiwi, I am after buys, but I want to see corrective cycle, meaning 2 waves or a range. At that moment, we don't have it, so I'm not trading the sells here. I'm after buys, as you know, for the long term. My main reason is this. So we might see the 2 waves, or we might see the hold of the range. This or other way around. For me, it's only after the buys. Okay. Jacek, entry point for Aussie dollar? Well, that depends on the strategy you trade. If you refer to the SPT, and again, first of all, make sure it's after the news, not before. And then you want to use yourself this. The closer we are to the cloud, the lower your risk. I hope you read the manual and watch the video about the SPT. If you didn't, please do, so you understand everything from there. Okay, you have it inside the members area. So that's pretty much it, guys. Now, I know many of you love to be involved with the euros. I don't see anything clear there, honestly. But if the news come out to the dollar side, this could be a good run. It has everything ready. I'm not going to be involved here, but for all those of you who are trading that, pay attention to it. I am not going against higher time frame divergences. You know that. So I prefer to skip. However, technically it has the room. It has the room all the way down to 110 or so. So if the news come out good to the dollar side, that might be it. So that's pretty much all for today. And thank you very much for being here, guys. And Rikos Ozicad. Ozicad is not clean, to say that gently. Do we have it ready for buys? No, you don't have higher highs, you don't have false breakout completed. I know it's ultra tempting with the way the candle pattern is structured, and the fact that you say the daily is pin bar is wrong because the day is not over. It's a potential candle pattern. It's not over. How will that end? You will know only at the end of the day. So can't say I would jump into that. The risk is tiny. I agree with you. The risk is tiny. 2 false breakouts, 1 alternative trend line, 1 horizontal. So yes, that might be tiny risk versus nice profit if the corrections take place. Do we have reasons for official buy? No. And definitely not a turnaround as a trend, right? So we might see some pullbacks, but the expectations are still down. That's pretty much it. All right, guys, thank you very much for being here. Enjoy your beautiful day, and let's see what the FOMC brings to us. I'll see you in the telegrams, and of course tomorrow here, same time. Ciao for now. Wonderful evening.